What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. Today's video, we're going to be covering the overall market. We will also cover Sofi and some other fintechs that got hammered today. The market just hit a 20% correction in the S&P 500 at one point today, and then a little bit of bounce back. So it's just been a terrible market, a 7-month sell-off. And guys, it's the weekend, so we got to do a little bit of relief drinking. We have a super cheap bottle, $12 bottle of New Amsterdam. This stuff is not that good, okay? This is mango. I'm buying this because I'm on a budget and I need to get a buzz to just get by these terrible weeks inside of the market. So I'll just, top this medicine shot glass all the way to the top. Take a shot. Whew. That stuff sucks. And if you enjoy this video, be sure to subscribe to the channel. We will be keeping you updated daily. Be sure to smash the like button. Don't forget to drop a comment. I'm going to be commenting back to as many people as I possibly can. Let's get into the video. All right, guys, here is the headline today. Boom. Investors scramble as the S&P 500 dives into bear market territory. Bear market means 20% correction, as you can see right here. So that's the headline today, okay? The S&P 500 finally hit that 20% correction after 6 to 7 months of selling off. We're going to take a look at a big hedge fund money manager, Dan Niles, real quick. This is a video he put out 4 months ago. I swear, when I used to watch these videos of him getting these interviews, I used to get really scared. Now at this point, guys, it doesn't even matter, okay? We need to be in the acceptance phase and just understand we have no control, and we're literally already down 30% in the Nasdaq. So what's another 10% drop really going to do?
So our big thing remains the same. 20% correction in the S&P 500, at least from peak to trough, when all is said and done. Multiples contracting, the Fed being very aggressive, but you want to take advantage of periods like what you just saw to go shopping.
All right, guys, you can see this video was January 28th. What is that, 4 months ago? He was right. It happened. S&P 500 corrected 20% today. That does not mean we can't go lower, guys. I think personally the Nasdaq can go lower. You saw my Twitter today. I think the Nasdaq can, drop to like 10,000 points. And that's really because of just a couple more companies that need to get a final flush. We can see here S&P 500 finished green, Dow green, Nasdaq red, Russell red. Believe it or not, guys, everything was down about 2% at one point. Then the market just did a weird little bounce today, just messing with the options. We're going to go over the options today. It was one of those days with millions upon millions of options expiration. It was ridiculous for Sofi as well. You can see Sofi finished down about 3%. It was down about 7% at one point. But you can see Anthony Noto bought $197,000 worth of shares. That's 27,000 units at $7.32, increasing direct ownership by almost 1%, guys. So this is a huge buy coming in, okay? He bought yesterday, I believe, 150,000. So he just doubled down and bought twice as much today. He believes that they're going to beat earnings for 4 earnings in a row, which is 1 year of earnings beats, guys. Sofi finally has their bank charter, and I believe they're going to prove by the end of the year they're one of those companies that are resilient in these types of environments. Once again, guys, here is the S&P 500. If we grab the top right here, you can see it says about 18.5%, but that's because we had a little bit of a bounce up towards the end of the day today. This bad boy hit negative 20%. And you have the Nasdaq. If we grab that top to bottom, guys, 29% correction. It was down 31% today. So I believe if we get that final flush on the Nasdaq, I believe this thing could really hit a 40% correction. And I'm going to show you the reasons why that could potentially happen, even though Dan Niles is happy with the type of sell-off that we've had so far. This is the Nasdaq 100 companies, the components of the Nasdaq, what, holds it up and what it's built of, okay? We just really want to look at the top 10, maybe the top 8, okay? We got Apple, Microsoft, Amazon, Tesla, Google, Meta, Nvidia. We know for sure that Amazon and Meta, Facebook have been absolutely smashed. I mean, those are down 40%. I believe the final two to really get us down to 40% correction in the Nasdaq is Apple and also Tesla, okay? Because Apple has been the most resilient out of all of these companies so far. And even Nvidia is down like 40, 50% or something like that. So it's just Apple and Tesla left. We know Tesla hit about, 640 today, and Apple was down to about like 130. So if we get, Apple to 120 and maybe Tesla to like a 560, 580, that could really get us down another 5% or more. So those are the two companies I'm really watching to get the final flush in the Nasdaq. 40% correction. So this is the 5-year chart of the Nasdaq. What I'm really looking for is like 10,000, guys. What you can see right here would be 10,000. I'm not looking for literally, the top of where, before the coronavirus crash happened. It doesn't have to go that low. I mean, that was over 2 years ago. But guys, right around, 10,000 or so, that's going to get us another 10% pullback from 30. So that's going to bring us over 40% correction. And we're at about 11,300 right now. So let's just take a look. So if we do 11,300, Nasdaq minus 10%, that gets us right around 10,100, 10,200. Okay, so that's, the worst case scenario, I believe. 40% correction in the Nasdaq. And I don't really think it's going to affect the fintechs, as much as people think, because those stocks are already down 50, 70% plus. I just think it's a couple more mega caps like an Apple and Tesla that need a little bit more of a flush to get the reversal started for a new bull market. Now, if we look at the top 103 growth stocks we've been watching, fintech got absolutely destroyed today. Upstart down 13% on some type of lawsuit, and then Nubank, I didn't even see any news on why a new bank is down. I think it has something to do with the lockup period. Still, investors are selling out. The market cap's like 18 billion. But guys, look at that. Those two fintechs got absolutely hammered. Tesla down 6.5%. It was down 10% at one point. We also have Lucid down 4, Block down 4, Sofi and Affirm. Look at that, guys. Both down exactly the same, 3.3 and 3.4%. That's an algos trading for you, okay? That's on a computer selling algorithm, okay? So fintech got absolutely hammered. We take a look. We got Nvidia down 2. So a lot of stocks finished down 1 to 2% to break even. We get into the green at the top. We got Cloud, Sentinel-1, Cloud, CrowdStrike, Cloud 8point, and also Cloud Fortinet. So you can see SaaS is getting a nice bounce because of that Palto network. So whatever the company is called is, had a good earnings yesterday. So overall, the market is just really flat, but the two stocks that were pretty red today at one point was Tesla and Apple. I believe Apple was down about 3%. So guys, really watch that Nasdaq if you're looking to go all in and try and catch in a bottom. 40% correction, that could honestly be the bottom, but honestly, we could still get a bottom, coming up soon because we're down 30%. Just remember, Dan Niles was looking for that S&P 500 20%. But if the Nasdaq goes down another 10%, the S&P 500 is going to hit a 25% correction. So just know we are getting close, and I still think fintech is the best bet because it has the best growth, the most growth. You don't want to be buying those companies like I told you yesterday, which was, that Target, Lowe's, Home Depot, Ross, all of those, retail that is just not having a lot of growth at all. We're talking 2 to 5% growth. JP Morgan, Intel, those companies are just so bloated and their market share is just not growing like these new fintechs. So guys, take a look. This is bar charts. This is going to be the options for SoFi. We could see for today, May 20th, 232,000 calls expired, worthless today, guys, in the red. Those options were getting destroyed. Early morning down 7%, still finished down 3%. So anybody chasing the green the past couple of days, this was a flush that they were planning on the options. It was one of those weird days where there was just massive call option volume built up for the May expiration for the 20th. You can see the call option open interest does back down the next 3 weeks. That's pretty good. 50,000, 20,000, 15,000. I really like that. Maybe we can get an uptrend going. Guys, you're not going to be as stressed if you just load up, 90% shares. You can buy a little bit of options. Just don't go all in. I seen some of these, super call option traders today trying to chase the SPY and the Nasdaq or whatever. And somebody was down like $400,000, $300,000 today trying to chase, a weekly expiration or something like that and lost half his portfolio. So I just don't think, being an options trader every single day of your life trying to, predict the market, it's gambling in my opinion. If you're doing day-to-day weekly calls, it's almost impossible. Okay, even the best guys that build their portfolios up to $1 million, they can go right back down to 100 grand in literally 2 days of, uncontrollable, volume inside of the market, which is just so unpredictable right now. So keep your call options to 10, maybe 20% max. Load up on those shares because you won't be as stressed. You need to be dollar cost averaging every 2 weeks, maybe every 4 weeks, and just relax and let the market come back. We are lowering our risk the lower and lower we go, guys. 30% correction in the Nasdaq, 20% on the S&P 500. There's not that much more room to run, even though we're in a nasty inflation environment. A lot of the bad news is priced in. If you made it to the end of the video, I want to say I really do appreciate it. I enjoyed doing this video for you. We will make it through these tough times the past 7 months. I believe we're getting really, really close. We just got to, get by this final flush on some of these big mega cap names, get these indexes flushed 40%, 25%. There's going to be a new bull market awaiting for us, potentially in the back end of 2022 starting, and then 2023, towards the end of the year, we could really get a nice bull run on these indexes. So just be patient, calm down on the calls, load up 80 to 90% of shares. Don't buy value stocks that have no growth. And that's my best recommendation for you. Always be sure to do your research. Once again, my name is Kyle. Hope you have a great day.